Hey, it's Connie from Prosperity Finance, sharing the best financial tips so that you can be more successful with achieving your financial goals. Now, due to this COVID-19, a lot of self-employed people already struggled with their business performance. On top of that, if they're going to the bank and trying to borrow money to buy their home or rental property, they will more likely to get a disappointing results. Needless to say, most of the customers who are self-employed have been impacted by this COVID-19. The performance dropped, in a certain degrees. Some are even out of business. Now, but here I'm talking about people are already recovered or on the path to recover. But when they go to the bank really scrutinize, ask a lot of questions, but in the end, still decline your application or significantly reduce the lending. So here we talk about there are three common reasons that the bank give that outcome. So number one is if you already applied a business loan under the government kind of assistance package, or if you applied the wages subsidy, especially after the first one, the second one I'm talking about, that kind of indicate your business really struggle. Now, if you applied for business loan but you haven't used it just because you just want, just for the rainy days, but you haven't really used it, and you can tell that your business is actually doing not too bad, actually you can just refund that business loan, and that will help you get a better results from the bank. But if you also applied for wages subsidy, the second one, that's going to be hard because that indicates your business, at least, your income reduced by 40%. So for the banks, they're really concerned, what is the trend going forward? Not really got a solution for the second wages subsidy, but for business loan, if you are doing okay, if you refund it, it's not too bad. It's not going to be just a decline straight away. Now, the second reason we observe is that if your business trading is less than a year. Now, before COVID, if it's less than a year, it's not too bad, you can do a forecast and the bank would take into account, right? But now it's going to be really challenging. Now, you haven't really have enough records to show the bank that get the bank comfort that what is your business trading, in the near future, because you only have a few months trading. Now with that, it is hard, but some banks still consider if you already traded for like 9 months or a bit more. Alternatively, some prime non-bank lenders would consider based on a number of things like your accountant letter, based on your GST return, based on bank transactions. They're still going to consider that if your bank say no. Now, the third common theme for decline is if you go to a bank that you don't have your business transaction. What I mean by that is, let's say you have an ABC Limited and ABC Limited bank with ANZ, for example, but then you go to BNZ for home loan. Now, before COVID, I would recommend that you have a separate bank for your home loan and your business, so that just in case if you in a trouble situation, unfortunately, then at least the two things are separate and bank has no control over your business cash flow, for example. But in the current strange environments, you probably get the best outcome from your own bank because they know you better. And also we been asked by bank, why they don't go through their own bank. It sounds silly, but it's, they kind of suspect, did you get a decline from your bank? Is that the reason you come to me? So it's very strange time. So what I'm trying to say here is maybe now is consider your own bank first, and later on, once your business more stable, once COVID is gone, then you can one day refinance your home loan to another bank that's not your business banks. So you can do it later. It doesn't have to be a perfect structure right now, but importantly, you get a best approval outcome from your own bank. So these are the three kind of a common reason that bank decline your home loans. Now, you probably also see some people, yourself, if you're self-employed, the loan amount was reduced. Yeah, you got approval, but the loan amount was reduced. So there's a couple of reasons that you potentially could get a better outcome. The first one is bank all kind of shade the profit to some degrees, because the reality is most of us, if you're self-employed, you get impacted at lockdown level 4. You couldn't operate at all at level 4. So you're treating kind of, put on hold anyway. So the bank almost in all situations shade your income and in the percentage. The common one we see is at least 15%. If you are doing, your business was impacted a bit longer at level 3 and level 2, they will shade more. But generally speaking, at least they will shade 15%. So you probably get a different shading from one bank to the other. Maybe you go to bank A and it got 30% shading, but when you go to another bank, they only shade 15%. So it's the same financial, right? And same everything, same supporting docs, but you get different outcomes. So don't just accept that offer. Think about what other banks, why the bank only approved this much. So the shading make a difference. Now, the second thing is, if your 2020 financials looks much better than the 2019, with the mainstream banks, they will look at the both years and then they will average the 2 years. So because of the 19 was a bit less than 2020, so kind of the average will be less than just looking at the 2020 alone. Now, there's a solution. So some primary non-banks, they only look at the latest year, and so they potentially they can use more income, therefore approve more. So you probably heard me saying primary non-bank a couple times in this video. So they are still mortgage lenders, but they are not New Zealand registered banks. Now they offer solutions where the banks, the mainstream banks, say no, or they approve less. So these primary non-bank lenders, they provide mortgage solutions at a slightly higher rates. Just put into context, for example, mainstream bank probably offer 2.49%, whereas primary non-bank they're offering sub 3%, so 3.2, 3.3. So yes, it's a bit higher, a percent higher, but hey, 3% is still affordable, rather than you wait for another year and then the property have gone up in value, so you have to pay more. So it could be an option if you 2020 year was better than 19 and you're not happy with the loan amount with your main bank, so it could be a better option elsewhere. So yeah, I just want to let you know, if you've been declined or you got a loan approval that not what you after, not what you expected, there could be a solution to improve the results. And I hope you find this video useful. If you are not self-employed customer, but your family, friends are, please pass on this video, so they might, struggling at the moment, and this video would help them tremendously. And I'll really appreciate you doing that favor. So thank you so much. Again, if you like our video, please feel free to subscribe our YouTube channel. Every week we have great content to share with you. Thank you. Bye.